Ladies and gentlemen, good day and welcome to the Welspun India Q4 FY22 earnings conference call hosted by Edelweiss Securities Limited. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Nihal Sham from Edelweiss Securities. Thank you, and over to you, sir.
Yes, thank you, Tanvi. On behalf of Edelweiss, I would like to welcome you all to the Q4 FY22 earnings conference call of Welspun India Limited. I would now like to hand over the call to Mr. Abhinandan Singh, Head Group Investor Relations at Welspun Group, to introduce the management and take it further. Over to you, Abhinandan.
Thanks, Nihal, and good afternoon, everyone. On behalf of Welspun India, I welcome all of you to the company's Q4 FY22 earnings conference call. We have with us today Mr. Rajesh Mandayewala, Managing Director, Ms. Dipali Goenka, CEO and Joint Managing Director, and Mr. Sanjay Gupta, the company's CFO. As usual, we will start the forum with some opening remarks by our leadership team, and then we will open the floor for your questions. Once the call gets over, should you have any queries that remain unanswered post the earnings call, feel free to reach out to either myself or Sanjay Gupta. And with that, I would like to hand over the floor to Ms. Dipali Goenka, our CEO and Joint MD. Over to you, Dipali.
Good afternoon, everyone, and thank you for taking the time to join us today. We hope that you are safe and in good health. I would like to share some perspectives on the operating highlights of our performance during FY22, after which Sanjay would take you through the financial matrix. The company has delivered a strong top-line performance for FY22 with revenues growing at 26.6% to 9,377 crores. In quarter 4, revenues grew by 3% year-on-year to reach 2,247 crores. Having crossed 1 billion revenue mark for the total company, the core business of home textiles crossed the milestone of $1 billion mark this year, with the revenues of 8,791 crores, growing 23.3% year-on-year. Innovation continued to be a key enabler, propelled by our patented products and processes accounting for 27% of HT revenues in FY22, growing by 6% year-on-year. We now have 35 patents filed globally, largest for any home textile player. Emerging businesses of brands, e-commerce, flooring, and advanced textiles continued on a strong growth trend, up by 44% year-on-year, accounting for 26% of total revenues of the company, up from 23%. Domestic retail businesses grew by 66% year-on-year in FY22 to reach the highest ever revenues, and also grew by 23.5% year-on-year in quarter 4. We have seen a 150% growth in awareness for brand Welspun from 6% to 15% this year. Each brand under domestic spaces and has independently become power brands. Reach of brand Welspun now covers 482 towns and 6,642 stores, adding 1,218 stores in quarter 4. We launched a new product category, mattresses, addition to home textile products. Despite the unprecedented increases in cost of products, we are able to maintain the margins in our domestic business. Welspun D2C initiatives globally is steadily making us an FMCG of home textiles, with e-commerce and branded business continuing its upward trajectory during the year, growing by 40% and accounting for 16% of total revenues. We had a successful launch of 3 brands during the course of the year. Wellhome.
This is the operator. Sorry, Dipali ma'am, we can't hear you. Participants, please hold while we reconnect the management line. This is the operator. We have the line for management reconnected. Ma'am, we just request you to please proceed.
Yeah. The flooring business continued to achieve newer milestones, growing by 107% in FY22 to 661 crores, costing 7% of the top line, and in Q4 grew by 60% year-on-year. Continuing on a focus on innovation in flooring as well, we have now 2 patents to our name. Near geographies in Africa, Middle East, and Far East have been added, and repeat orders from existing large customers is very encouraging. Domestic business is shaping up very robustly with a brand reach of 260 million in FY22. There has been considerable marketing investment on both offline side in terms of ad films, related branding and social media, and on the online side with a refreshed site and improved traffic. True to our sustainability goals, flooring also is embedding ESG and circularity, like Zero Landfill Company from they achieved zero waste certification from SCS team for attaining certification with 98% waste diversion from landfill. We have conducted life cycle assessment for all products and have verified third-party environmental products declarations. 15% of total energy is from renewable energy rice husk and target taken up to 25% by 2025 and 50% by 2030. Zero liquid discharge operation from the day one of operation. Welspun has been at the front runner in the industry encompassing sustainability and ESG in every realm of operations. We are clearly differentiated in the industry due to our sustainability work and have set benchmarks for the industry as a whole. Like multi-level traceability solution of WellTrack allows the consumer to track a finished bed bath product to its raw material source using blockchain. We had the first Dow Jones Sustainability Index, DJSI, this year with an ESG rating of 48, which is 62% higher than the average industry score. We have set up ESG Compass, an integrated ESG digital platform, an automated data dashboard covering over 90 indicators extending to all sites, locations, and subsidiaries in India. We have joined SBTi Business Ambition for 1.5 degrees centigrade campaign and is committed to set a robust emission reduction target at the pace and scale required by climate science. Our Anjar facility had the first prize winner in the Best Industry category at the Union Jal Shakti Minister 3rd National Water Awards 2020 for SDP operations and zero fresh water usage. Tesco, UK's leading retailer, awarded sustainability and community for exceptional focus on community initiatives and for outstanding ethical performance. Other emerging businesses of advanced textiles recorded a revenue of crores in Q4, growing 17% quarter on quarter, despite the headwinds that the business faced due to higher logistics costs and spunlace demand remaining muted due to stock corrections. These headwinds resulted in the yearly revenues of advanced textiles 297 crores, 4% below last year. In March 2022, we commenced commercial operations in a Telangana facility, which has an installed capacity of 1,729 metric tons per annum of spunlace. This augurs well for this segment's prospects going forward. During the second half of the year and also during Q4 FY22, faced multiple headwinds that include extraordinary macroeconomic factors such as sharp and unprecedented rise in key raw material prices, increase in energy costs, and disruptions in the global supply chain, which has further worsened due to Ukraine-Russia conflict. To give you a snapshot, Quartlook index has moved up from 92.5 pounds in March 21 to 142 cents in March 22, and currently is at 159, an increase of 75%. In India, Shankar 6 has reached a high of rupees 93,000 currently, the highest level ever recorded, up almost 100% as compared to March 21. Today, the prevailing rate is 100,000 per candy. Coal price index, as per ICI FOGAR 4,200, increased by almost 150% in last 1 year. In addition, the ocean freight of coal imports during the same time tripled. Ocean freight rates during the year similarly has increased about 3x during the last year. Spot rates for USC rose from 4,500 Q4 FY21 to 11,000 container in Q4 FY22, a 144 increase. In addition, container shortages, port congestion, and a shortage of truckers in the United States, which is our primary end market, have all resulted in noticeable, albeit transitory operating challenge. Therefore, mentioned factors have, as you may have noticed, weighed on our operating performance, especially during the latter half of the year, which is reflected in our quarter 4 FY22 results as well. During quarter 4 FY22, the company's revenues grew 3% year-on-year. On a sequential basis, however, revenues witnessed a slight decline of 8% quarter-on-quarter on account of some rebalancing of demand due to correction in stocks, as indicated by us during the last quarter, precipitated primarily by logistics and supply chain challenges. The global economic situation has further worsened in the latter half of quarter 4, and as we enter the new financial year, high inflations in Western economies, leading to decades high interest rates and slackening of demand across categories, logistical challenges getting more acute with non-availability of containers, leading to continually rising ocean freights, and cotton index scaling newer historical heights every day. In such unparalleled, turbulent times, we are taking these steps to ensure that we continue our dialogues and long-term partnerships with our customers, keep keen eye on operating costs, and further innovate and value engineer our products. We believe that the business sentiments which have deteriorated the last few months would take a few quarters to resolve and ease itself. Hence, while the medium to long-term fundamentals of the business remain strong, the next couple of quarters are a bit challenging for the business. Following the global currently, as and when the commodity prices normalize and inflationary pressures abate, our operating performance would reflect that. With this, I would now like to hand over to Sanjay, who will quickly take you through the financial highlights. Over to you.
Thank you, Deepali. Greetings, ladies and gentlemen. Before we open the forum for questions, I will briefly discuss the financial highlights for the quarter and full year financial year 22. During quarter 4 financial year 22, we reported revenues of 247 crore, an increase of 3% year-on-year. For the fiscal year financial year 22, revenue increased by 27% to 9377 crore, up from 7408 crore in financial year 21. I am particularly pleased to share that during the financial year 2022, the company achieved highest ever sales volume in bath linen, bed linen, and rugs and carpets. Bath linen sales volume increased by 1%, bed linen sales volume increased by 6%, and rugs by 19% in financial year 22. We reported an EBITDA of 246 crore in quarter 4, which is 11% of sales, as compared to 308 crore at 16.5% year-on-year. For the full fiscal year of financial year 22, EBITDA stood at 1,425 crore, translating into an EBITDA margin of 15.2% as compared to 1,420 crore last year, which was 19.2%. During the year, input costs have been increasing significantly, and the situation has escalated very adversely in the last 2 quarters, with commodity prices touching historical highs and logistical challenges becoming insurmountable. Coupled with this, the entire global economy is affected due to the Russia-Ukraine conflict and the inflationary pressures which has gripped US and Eurozone after decades. These have put untoward pressure on margins of the company, especially in second half of financial year 22. In spite of these headwinds, with our drive towards cost optimization, use of technology, and improved efficiency, we have been able to reach the same rupee EBITDA for the year as last year. Going forward, changes in the government's cotton import duty structure may deliver some net benefit for the industry in general, but any major shifts in cotton costs might be seen only once the new crop season begins. Further, the cotton demand situation in India is further impacted by continuing exports of cotton from India. I'm also pleased to share that profit after tax after minority interest for financial year 22 rose by 11% to 601 crore compared to 540 crore last year, despite the challenging environment in second half of financial year 22. PAT for quarter 4 of financial year 22 was 52 crore as compared to 130 crore year-on-year. Our consolidated earning per share for the year financial year 22 stood at 6.06 per share, which is 13% higher as compared to last year. EPS of 5.37. EPS for quarter four stood at 0.53 per share, vis-a-vis 1.3 in the corresponding quarter last year. On the forex front, we have been consistently following the board-approved policy to hedge around two-thirds of our receivables on a rolling 12-month basis. Our average exchange realization for the US dollar during quarter four was 77.43 compared to 76.14 in the corresponding quarter last year. For the financial year 22, it was 76.31 vis-a-vis 74.2 last year. Let me now share some balance sheet analysis. We continued our focus to reduce our net debt position, and at the end of quarter four and financial year 22, the company's net debt stood at 2,229 crore, down by 104 crore from 2,333 crore as on 31st March 21. Excluding the flooring business related debt, net debt stood at 1,399 crore as compared to 1,637 crore, a reduction of 238 crore. As on March 22, we have in hand e-scripts of ROSCTL ROSTEP amounting to 377 crore. Monetization of the same would have brought down our net debt further. Over the last 5 years, our net debt to equity has come down to 0.5 times as on 31st March 22 versus 1.27 times as on 31st March 2017. Gross block stood at 6,824 crore and we spent 543 crore on capex during the year. Return on equity for the company's business stood at 15.8% in financial year 22 as compared to 16.3% last year. And return on capital employed stood at 13.4% vis-a-vis 13.8% in financial year 21. In spite of investments in our growth businesses and buyback of shares done during the year, net debt has remained below 31st March 21 levels. Coming to segmental results, home textile revenue stood at 2,073 crore in quarter four, representing a year-on-year increase of 1%. For the full year financial year 22, the home textile business clocked revenues of 8,791 crore as against 7,128 crore in the preceding year, recording a growth of 23%. EBITDA margin for the home textile segment stood at 11.6% in quarter four, vis-a-vis 18% year-on-year and 16.1% in financial year 22, which is down from top 20.9% in financial year 21. The flooring business revenue stood at 189 crore in quarter four, representing a year-on-year increase of 60%. During financial year 22, the flooring business clocked revenue of 661 crore, recording a growth of 107% year-on-year. The business had a small EBITDA loss of 2.9 crore during quarter four as compared to a loss of 19 crore last year. For the full year 22, EBITDA has substantially improved to a loss of only 14 crore as compared to a loss of 100 crore last year. The expansion projects of flooring, advanced textile and home textile businesses, which were in different stages of progress, got near completion in financial year 22 with some balanced capex remaining. Capex spent in financial year 23 to complete these projects and for maintenance capex is expected to be around rupees 230 crores. In spite of the capex, the net debt of the company is expected to be around 2,100 crores in March 2023. We are providing the guidance in terms of capex net debt for financial year 23. However, in view of uncertainties around factors which we have discussed earlier, for example, fluctuations in input costs, including cotton, coal, and other raw materials, logistical challenges, and related costs thereto, and rising inflation in our target markets, The company is not in a position to provide any firm guidance for financial year 23 at this point in time. At its meeting held today, the board has approved a dividend of 15%, that is 0.15 rupees per share. The total outflow for dividend would be 148 million, and this translates to 2.5% payout on consolidated PAT. With this, I will leave the floor open for your questions and hand over to the moderator. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question, please enter star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah, hi. A couple of questions. One, starting off.
Sorry to interrupt, sir. There's a lot of disturbance coming through. If there's any external headset that you've used, we request you to use handset, please.
Sure. Is this better?
Yes, much better, please.
Okay, perfect. So, couple of questions. Starting off with the revenue decline in the home textile segment. I was just going through the presentation. It looks like a fairly broad-based slowdown across categories. So if you could just give some color on why utilization numbers are also down and what should we expect in the coming quarter for first quarter, second quarter, that will be very helpful.
So I think I'll take this question. So the important thing, let me just put you through, is that I think there has been a complete glut in the whole logistics that we have seen. I think if you would know, in United States of America, the West Coast was completely choked. East Coast was also completely in a slowdown. Having said that, the holiday season goods also reached the retailers in the quarter 4. As a result, there has been a glut in their inventories. Their warehouses are choked. So there is a correction happening in the stocks as well. So while having said that, now if I look at the whole costs that we are seeing in the terms of commodities, they are also playing a lot of they are also instrumental in the impact in the whole revenue. But fundamentally, it is because of the stock correction that happened, and hence this is where you are seeing the slowdown in quarter 4. Looking at the the onward perspective as well, definitely the commodities are going to play a major role. And saying that, I think everything is doubled over what it was, and hence and inflation reaching like the Fed rate going up in America, the ECB in Europe, the repo in India. I think overall the situation doesn't look that good right now. So definitely demand would be a little muted.
Okay, so some timing issues, some demand slowdown, and logistics. Broadly, those three things will be responsible. Okay.
And commodities. Cotton today is 100,000 today. And of course, I think the energy costs and everything also are playing impact on everything what we do.
Okay, fair enough. And if you can just talk about, given cotton prices have been so strong, what kind of price hikes were you able to sort of push through in the fourth quarter and first quarter, and how is it looking now?
So I'll tell you, we've already taken 2 rounds of price increases. And I think we all are consumers, and when we buy a product, there is a ceiling to a price that you buy. So definitely, you can't pass on all the price to the consumer, because then the demand is anyway going to slow down.
Fair enough.
Yeah.
No, I agree with that, more or less. Fair enough.
Yeah.
And just last question from me, I'll probably come back in the queue. Flooring has again slipped into a marginal loss. It's a small one, but I thought it was kind of turning around. So just what has happened over there, and what should we expect for first quarter?
So it's the same story here. It's the cost on commodities which have been relentless through the year, and also the ocean freights, which have, this, and it makes it difficult. See this, whether it is our home business or whether it is the flooring business or the advanced materials business, bulk of our business is actually coming from the international market. So, this when you on an average, let's say stuff $30,000-$40,000 of merchandise in a container and end up paying $6,000 to $12,000 in freight. So it impacts the cost of ownership for our customers, and consequently, the retail prices have gone to a point now where, let's say, this top line is affecting. Same thing has happened on the flooring side as well. So there's a commodity push. Also, let's say this ocean freights have gone up and they continue to go up as we speak. So we are trying our best to this collaboratively we work with our clients, and this on the one hand you have to maintain, or let's say this maintain your client profile, the strategic relationships that you have with them, and on the other, let's say this also manage the bottom line. So we have been trying to do this balancing act, and this taking decisions accordingly. And the loss here, so we would have broken even. There's some extraordinary charge. We had some merchandise which got damaged in transit. So we had to take provision on that. Otherwise, we would have been positive EBITDA. But unfortunately, it happened in March, and the insurance claim was not filed and approved. So we provided for the damage, but the consequent credit was not accounted for. So which is why otherwise we would have been in positive. But this we could have been much better had those commodity situations not been there. And to be honest, I think the situation is going to be, this is going to continue the way we see it now or two, because, we don't see the commodity pressure abating. In fact, the ocean freights are actually going up because, our long-term contracts run out this in April, some in May, some in June. And so, consequently, the freights are actually continuing to move up. So we'll have to manage. It's a juggling act that we'll need to manage and wait for an appropriate time to this go aggressively after margins than top line. So I guess this we are a quarter or two away from that, and so all we are trying to do across our businesses is to manage, let's say, the top line and the margin, so that this we get out of this with our top line, which our business intact, with our clients intact, and relationships intact. So look, what we are seeing is extraordinary. Now, whether it be cotton or PVC or whatever, we are seeing prices at an all-time high. They can't sustain at these levels. Also, this the demand side, where people were actually locked down into their homes because of COVID. So the people consume more products and less of services. I think the consumption of services is now growing, and consequently, let's say the disposable spend for discretionary product is reducing, and also this increase in prices have not helped. So all in all, I think this over things will settle down. It looks like they will settle down, but we don't see it coming in the next quarter or two. But eventually, they have to come to long-term averages or thereabout, and the margins will certainly resurrect once we get to that situation. So, but right now, this we are actually right there in the eye of the storm, and so it's a difficult situation, and it's actually navigating week to week, day to day, month to month, and client to client. So that's the way we are trying to manage our business.
Yeah, no, I totally agree and appreciate it's a tough one for everyone in the industry. So just one last follow-up question. This one-off cost related to the damage, how much was it in this quarter?
I think about 4 crores or so. So
okay.
Our EBITDA loss is about 3, and we provided for about 3-4 crores on account of the damaged merchandise.
Okay, perfect. That's it for me. Thank you so much.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, everyone. So my question is related to demand.
So, what is your demand outlook in terms of procurement? We get, we get that cost and some challenges in the logistics.
You're not clear.
Yes.
You're not clear, please.
Hello.
Yes, please proceed now.
Good afternoon. Good afternoon. So my question is on your demand outlook in the next 1 year. How do you see the demand across the segments in terms of volume? Do you see the same level of demand remaining or going up, going down? Any idea on the demand outlook?
The demand outlook definitely looks muted. It doesn't look very encouraging for the next couple of quarters. That is Q1, Q2, and I think Q3, as you know, because definitely there is going to be that kind of the visibility right now looks very muted because of the commodities also. And I think post the holiday season is the time we definitely will see something, the green shoots coming in. Anything from your end?
Ma'am, so we recently read that we have signed, India as a country has signed ETA with FTA with Australia, and so do you think it will have any positive impact on home textile business? Secondly, we expect we are optimistic about FTA with Europe. So that would have any impact?
So let me just put it to you. Of course, they both will be very, very positive. Australia, we anyway do business, so definitely that's going to be encouraging for that business, that side. And FTA for UK also would be will put us being competitive to the other countries that we compete with. Having said that, USA remains the biggest market and the biggest economy of consumption. So I think that will play a very big role in the terms of the whole demand as well. But yes, to your question, with UK FTA, India is here to gain, and Australia definitely is encouraging too.
Okay, thank you, ma'am. And one final question, if I ma'am, we know that the cotton costs are historical all-time high. But besides the cotton cost, what other factors are significantly impacting our margin? We know that energy cost, logistics, but are they too significantly impacting our margin? What are the factors that are significantly impacting our margin?
Most definitely, Biplab, when ocean freight is 30% or thereabouts of your container value, it is going to impact the business. So every element, see this, and finally, this everything adds up, isn't it? So your raw materials, your fuel, the other commodities, the ocean freight, everything adds up, and finally, it shows up at the door of the customer where, the cost is already, the landed cost is already moved up by 50, 60, or maybe in some cases even doubled from where they were when all this, this commodity cycle changed. So it's obviously going to impact both the top line as well as the bottom line. See, the good thing, which this I want all of you to know, is that the overall India story is playing out. So this we have a dominant share, for example, in the US, where we have a level playing field with our competing countries, and we have, in fact, our share has continued to either get maintained or only grow as a country. So the overall story is intact. Now, if the consumption, based on whether the consumption is going to increase or reduce, so these are, a few quarter issues. So, as things correct, as prices correct, this consumption will automatically come back in our key consuming markets like the US, and when it comes back, let's say both the top line and the bottom line will resurrect. So it's a time, it's a period where you have to wait out. But let me assure you that at the bottom, I think the story is intact. There is nothing wrong. This beyond a point you can't move or increase prices without actually seriously damaging the top line and this unfortunately we are right now caught up in that situation, so we have to wait it out. We've had some great years in the past, so there's some great quarters in the past, and it's okay if we have a few rough quarters. You have to ride through it and be true partners to our clients and make sure that together we are able to just ride over this difficult period. So there's a quarter or two here and there, but eventually, as I said, the story is intact. India is in a very favorable position. Our cost structures are good. Our market share is intact. Everything is, so the underlying story doesn't really change. And with the FTAs, it will only improve now. There's also our minister has gone on record to say this next year we are hoping now that the FTA with Europe could also materialize. And we have discussion one with Canada. And, so all these markets which are currently, let's say this, we have a disadvantage over some of the countries like Bangladesh, Pakistan. If these FTAs also materialize, so it opens up another third of oil consumption as a level playing field for all of us. So hopefully, as and when that happens, this this as a country, this our position in the marketplace will improve. So this repeating for the third time, I think the overall underlying story is intact. These are, let's say, this transitory challenges. There can be a few quarters here and there, but the underlying story is intact.
Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for taking my questions. I wanted to understand, right now you mentioned that countries like Bangladesh and Pakistan, if there are FTAs. What I had been hearing is, I think US had sanctioned Bangladesh for some issue, and that is likely to get reversed. So would there be impact, and which are the other countries like Vietnam, or which are the other countries we are competing with?
So I'll just tell you that with USA, we are in a strong position compared to countries like UK and Europe, where the FTA has an advantage for them. And the category that we play with is the middle to the upper segment, vis-a-vis Bangladesh and Pakistan are at the OPP. So definitely, I think for us, we maintain a position there. So I think we wouldn't be anyway impacted by that.
Okay.
In fact, if the FTAs come about, we'll actually have an advantage.
Yeah, we'll add on more to our portfolio.
Okay. And what would be the revenue from the top 5 or 10 customers, the customer concentration? How much would it be contributing?
I think that would be major of the number that we talk about it. So that is something that I think we are doing around $782 million in our home textile.
It's about 45 years. So we have a good mix of customers, and this while this big customers always remain important and strategic, but this, I think our risk is pretty well spread, and so it will be about 40-45%.
Okay. Thanks a lot. I'll join back in the queue. Thanks.
Thank you. The next question is from the line of Prathamesh from Axis Securities. Please go ahead.
Yeah, hi. So my question is regarding the truckers issue in the US and Canada. So this problem was, I think, because of COVID-related reasons. So I think with all COVID gone, do you think this problem is about to end in next quarter or two?
I think it is not just because of the COVID. It is also because of the demand and the Amazon factor. They have basically hired most of the truckers, and the prices are far dearer. If you would have heard about the $150,000 that they're paying the truckers. So I think there is an issue of the availability of truckers, and that still persists. And that is a concern. And there is a lag there, because a lot of goods after reaching the ports have a concern, and there is a lot of detention by the time it reaches the warehouses as well.
Okay. And coming to the cotton prices, so 1 lakh is definitely not going to be a sustainable price, but what, according to you, will be a ballpark figure? Like 2-3 quarters down the lane, where will be a ballpark figure? And do you think, are you going to plan any backward integration for this thing? Because this thing has been giving trouble to you.
I think I think for us the cotton, if I can look at it right now where it is at 100,000, we are very sure that it's not going to be the price it at its peak. But I think every time it defies that norm. We were looking at 65, then 75, then 85, then 90, and today it's over 100,000. So, but I think as the sowing has started, the harvesting will be in September, and the acreage has increased. But I still feel the floor will open at 70,000, not lesser than that. That's what it looks like at the moment. And when you talk about backward integration, I think for us at Welspun, we're completely integrated as a company, whether it's in our towels, whether it's in our sheets, or whether in our rugs, in fact, right now. So
we are partially integrated, if I'm not wrong.
Beg your pardon?
You are partially integrated, right? Like only 40% of your raw material you source by your own.
No. We don't grow cotton here, so we make our yarns, yes, but we don't grow any cotton. So
that's what I'm talking about, the yarn. So you are using only 45% for your total capacity of that. You can use only 45%, right?
Yeah, about 60
or 70.
thereabouts, yeah.
Okay. And in the current quarter, there was this 8% degrowth. So what was the actual volume degrowth? Like, was there any offset because of some price increase? What was the actual, if you can bifurcate between the actual degrowth and the...
So I think, look, this quarter on quarter, we don't even analyze, we don't even bother analyzing, yeah. So, these things can happen, and our contracts run for multiple years, yeah. So we don't look at our business on a quarter-on-quarter basis. And they see with the inventory up and down, things can, one quarter can be extraordinary, the other, let's say the inventory corrections can happen. So I wouldn't read too much into that.
Okay, sir. That's it from my end. I'll get back in the queue.
Thank you. The next question is from the line of Kalpesh Gothi from Valentis Advisors. Please go ahead.
Yeah. Good evening, ma'am. In the last couple of quarters, we are focusing more on ESG front. So my question, your ambitions towards become a carbon neutral and the fresh water positive by 2030. So can you elaborate more on this on the ESG side? And what's the status of the wastewater treatment initiative?
No, but I think for us, I would say we are water positive today as well. In fact, we just got the President's Award for that. The carbon neutral, we have a roadmap for 2030. And that's what we are looking at. And that's where we are working towards. So definitely, and I think it is on a website. If you go and you can look at our goals there, they are quite intact in the terms of our milestones that we are wanting to achieve.
Yeah. And what's your, we are focused on moving from...
More, I think I told you that clear. Can you?
Yeah, am I audible now?
Yeah, go ahead, please.
Yeah. And also you are into renewable energy.
Yeah, so we are working on that project, and you will hear from us in a couple of months on that as well. Having said that, our goals towards the renewable energy also remain intact, because it is not only a commitment towards what we do in the environment, but it is also a commitment towards our retailers. And those are the things that we are going to fulfill as well.
Okay, thank you.
Thank you. The next question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity. My first question is on your capex plans. Your towel capacity expansion of 25% to reach 102,000 tons per annum. Where is it, and by when can we expect that to come in?
So this quarter, end of this quarter, we'll be there, and by and large, in fact, most of the capital expenditure is either concluded or will get concluded by September of the current year. So we are very close to completing almost everything.
But will it
To add
make
to
sense?
that, Prerna, the new capacity that we were thinking of, that we have pushed forward a bit by a year.
Okay. Yeah, because
What we will be completing is up to 90,000 tons. We'll complete by Q2, and the new capacity setup we'll do after a lag of a year also.
Okay. Okay.
Yeah.
Sir, I understand the demand concerns in the US, but considering that we have long-term contracts, should we see the 67% utilization that you have done across majority of your product range as the number that will be sustaining for this next 1 year?
So it all depends on the demand that comes in from the consumer. So while we have the replenishment program, but it also depends on the front-end demand that is there. So definitely those contracts are there, but it will depend on what the last mile demand is actually. So with the goods, there's a glut as I spoke about earlier, and there's a stock correction that is happening. So that is again something, and also the COVID saw a peak of demand, and now the wallet share also is getting divided.
Okay. Okay. And ma'am, can you give some color on the inventory with your customers, something in transit, so that we can take a, track how if retail sales are there and how the demand can come in. Some color on the inventory days with your key customers.
I'll tell you one thing, we work very closely with the customers. To that extent, we do vendor manage inventories for few retailers as well. So, we actually are in touch with all our retailers in the terms of retail, the whole point of sales analysis as well. So I think for us, we are today, in fact, you can look at it, Prerna, from the perspective that I will not spin an extra towel or I'll not weave an extra sheet, because the prices are anyway, the cotton is so expensive. So for me to control the inventory, not only at the factory, the goods on the sea, the goods in my warehouses is far more utmost important for me than anything else. So our supply chain analysts at the point of sale give us a visibility. Our supply chain and the production planning team here give us a visibility what could be the demand. So we actually rationalize everything. So there's a very close watch on anything what we make and what we do.
Okay. Okay, understood. So, ma'am, my last question is on working capital cycle. This year, your debtors days have reduced substantially, and your inventory days have also come back to normalcy around 74, 75, 78 days. Just help us understand whether is it just that collection has happened faster, or is this the new norm in the debtors days?
Over to you,
Yes,
Sanjay.
Yes, Prerna. So yes, there has been concerted effort to realize the debtors, overdue debtors. So done a good job, and we have been able to reduce the debtor days substantially, and we hope to maintain at this level, because our average dues with the debtors is 45 days, and we want to be below that number going ahead. Similarly for inventory, so inventory also had increased to some extent during Q2, Q3. We have brought down that through substantial better planning, and we wish to maintain this level of inventory going ahead as well.
Okay, thank you so much, sir. I'll come back on the question queue for further questions.
Thank you. The next question is from the line of Neeraj Mansinga from White Pine Investment Management. Please go ahead.
Thank you for the opportunity. I had a question on the flooring side. Can you share with us capacity of the soft and the hard flooring, and what was the utilization for the last quarter?
So, Neeraj, good question. Capacity is also a work in process. So while we are overall capacities are at about 25, or let's say there's about 25 million, but there is some balancing equipment that we have chosen to defer as for sales to actually pick up. So we are currently clocking about we have a current run rate of about 10 million. So we are between 40 or 40% or thereabouts. So by and large we are there. But just don't look at the utilization levels, because look, this is a new business, and mind you, this the first 2 years of operation were all done in the period of COVID, where none of our boys could get in front of the customers. Forget about this developing a market. So 2 साल तो हमारे उसी में निकल गए. So right now, see this, all we have done is open doors with some great clients all over the world, and the product. So there's still a lot of product mix richness which is going to manifest itself. So we are right now at the by and large at the lower to the this middle end of the market, and over a period of 2-3 years, even the product mix will get richer. So the same amount of yardage will actually deliver a higher, let's say this unit value realization, apart from, of course, better utilizations in the future. So I hope that answers your question.
Yeah. So some more related. I think when we put up this plant, after that we had got some positive surprise of some improvement in the demand from the US markets after some China exports to the US being slowing down. So what is the status of that, and how can we see? Do we see visibility of that exposed to the US scaling up on this flooring business?
Absolutely, clearly, Dheeraj. So, and this time it is not only about prices. So we have seen this China thing happening in the past as well, but this time I tell you it is different. So, these large clients are actually afraid that their businesses might actually get disrupted if they are completely depending on China. And so there is a strategic intent and a program to de-risk their sourcing, and we are continuing to see that. In fact, it's getting more and more visible from more and more clients, and so this time it looks like that it is here to stay.
And the demand would be more from the soft flooring or the hard flooring from the US markets and exports?
More of hard, Dheeraj, because office hai to yaar, see the soft flooring goes more into offices and
right.
Cinemas and hotels and all that. So 1.5-2 saal to ye band hi rahe hain. So that part, so it kind of was slow, and that also needs a physical contact with the clients, which unfortunately we could not make over the last couple of years. Our boys have just started traveling from January and getting in front of the customers. So, and also offices are opening up. They have opened up. Hotels are this running to some decent capacity. So now we are seeing, let's say, this good traction build up. I think by the end of this year, this we should have our feet firmly on the ground on the soft flooring side. So right now, I think we are seeing more throttle on the hard side than on the soft side. But I want to qualify, let's say, this my statement by saying that we are seeing the same kind of margin pressures in this business as well that we are seeing with the home business, and this cost push is just so relentless that it's a everyday job to do this balancing act between top line and margins, and so which we are trying to this exercise our best judgment and just push it forward. But it is this on the margin front we are struggling, and you've seen that even at that 180-90 crores we have just barely managed to break even at EBITDA, and the intent and the quality of the business is much better than that, Neeraj. But unfortunately the pressure of commodities, ocean freights is putting a lid on the margins in this business as well.
Got it. Thank you very much, Rajesh. Yeah.
Thank you. The next question is from the line of Vikas Jain from Equirus Securities. Please go ahead.
Thank you, sir. Thanks for the opportunity. The first question is in continuation to one of the earlier participants' answer, where you said that you do have a very good analysis on how to say that the retailers end up progressing. So any color as to what is the end market or the end customer demand looking like, as in more in terms of how are we seeing this supply glut to even out, in what period of time is the best estimate that this can even out?
So good question again. So this one thing we are definitely seeing is that it's a steady this trickle, the curve is actually in the reverse direction. So, this, I'm afraid, what we are seeing is a constant, let's say, so the demand is reducing. And I'm saying it is not only from our clients, but our clients, which is the final consumer. And the increased retail prices are, and look, our product is discretionary, so the increased retail prices are impacting. And then the other factor is also that this consumption of services is now, let's say, catching up. So the last year and a half, 2 years in the lockdown period, the services were not as much consumed. So some catch up is happening on that side also. So we'll get a clearer picture, I think, in the next 3-4 months when things even out, when the world returns to a steady state, services to product consumption pattern, and hopefully by that time the commodity prices also correct. So I think we'll get a better sense, a better handle on that. But right now, over the last 2-3 months, what we have witnessed is a steady decline on the point of sale. So we see some this occasional spikes when products get promoted very aggressively. So we see these occasional spikes. So that kind of levels and averages things out. But this on a general basis, let's say this the curve is tracking down.
Okay. And one more question. So you mentioned in your opening comments, or rather in one of your comments, that the long-term contracts for this containers are just about to end in April, May. And so can you just give a color as to whenever you enter some new contracts, how much surge that you can witness in these prices or contracts?
Normally, if you had asked me this question a year and a half back, it would have been the other way around. Every contract was at a lesser price. So now it's the turn of the shipping companies to draw blood, and which they are, this I must confess, doing it brilliantly. So, but this from where we were last year to now, it's almost 250% up. So it's a very, very steep increase, and so we are even right now currently under negotiations with the shipping lines, and so all in all, this overall this, and there was one renegotiation that happened in the middle of last year as well. So the freight rates have been constantly growing up, but this the things don't look very good here. So overall, from one point from April or May of last year to now, this is looking like at least 250%, particularly to the US. It's not as bad to the other parts of the world. In fact, in the other parts, freight rates have already started correcting. So to some extent, so like for example, Latin America freights are already tracking down. Far East, the freights have started tracking down. Europe has kind of settled down. Mediterranean is kind of settling down. But America, this unfortunately is very, very strong right now. And, so we'll know as we close the contracts over the next few weeks. But, this from point to point, from May to May, this is 250%.
Right. And just one follow-up, sir. Almost all of our shipments that we send to our retailers are come under the long-term contract, or do we have something open, or we send it in open contracts?
See, 85 to 90% of our business is replenishment. So it's like a white shirt that you keep shipping this as the customers sell, they reorder, and so the program continues till such time, let's say, the productivity on their shelf space is good, and then when the productivity on the shelf space starts dipping, that's when, let's say, the transition of the program happens. So 85 to 90% of our business would be like that, right?
Yeah, it is. And over to, I think, FOB and CIF is another combination. So I think for us at Welspun, primarily 80% is FOB and 20% is CIF as well. So that's again a very important part of our impact on our freight costs that have impacted us.
Correct. Okay, thanks for the answering the questions. Thank you.
Thank you very much. In the interest of time, this was the last question. I now hand the conference over to Ms. Dipali Goenka, Joint MD and CEO, WELSPUN India Limited, for closing comments.
Thank you. So I would like to thank you all for your insightful questions. As we stated earlier on this call, while our medium-term performance is likely to reflect the impact of a challenging commodities and logistics environment, as a business, we remain focused on transitioning from being a manufacturer to a direct-to-consumer company and FMCG of home textiles, enabled by investments in innovation and technology and the strong traction we are already seeing in our B2C initiatives, our brands, and our digital channels. And we will achieve this while also ensuring that sustainability and circularity remains embedded across our value chain. I would like to conclude by thanking each one of you for your continued interest in Welspun India.
Thank you very much. On behalf of Edelweiss Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.